talking about, speaking of deductions, a lot of people would like to know about these things. What about when people have a very costly surgery, medical expenses, dental surgeries, etc.?
Well, yeah, those are that could go up really, especially dental implants, things like that.
Uh-huh.
Yeah, they should keep the receipts for those. They should be able to support the payments that the taxpayer made for those medical expenses, and also keep in mind that medical expenses is limited. In other words, there's a threshold that you have to go over in order that those medical expenses can be deducted. For example, now it's 10% of your adjusted gross income. So if you have 100,000 adjusted gross income, your medical expenses, in order to have an effect on your tax returns, should be more than $10,000.
Oh, wow.
So if not, then you lose those you lose those deductions.
So in other words, just ordinary cleaning or just dental filling, those will not be included.
It is included, but again, they have first to reckon 10% of your adjusted gross income, and only the excess of 10% of adjusted income can be deducted.
Uh-huh. Now, what about problems in your home? If, for example, there was damage, there was flooding in the basement, etc., will those be counted as deductions?
Damages not covered by insurance are deductible.
Uh-huh.
Those are what they call losses not covered by insurance.
I see.
Yeah.
Mm-hmm. So what are useful? Let's say for working people. What about their representation allowances? You know, they spend dinners for clients and many
yes.
other expenses.
That's deductible too, but it must be, of course, connected with your work, with your business.
Mm-hmm.
And only 50% is deductible.
This is yes.
Must,
mm-hmm.
of course, supported by receipts. Although, if the dinner cost is not more than, I believe, $75, you don't have to present receipts, but you have to present records of the date that you had your dinner, that the person that you talked with, and the business that you talk with, the topic of your discussion. You cannot just take somebody to dinner and claim that as a deduction. Okay.
Has to be part of your job.
Yeah, okay. Must be.
Yes. You know, it's interesting because many people, not specifying a particular country, but people from the United States, they have many families abroad, different countries, and they send some support, maybe paying tuition fees for relatives or supporting someone in a family or sending gifts. Are those things deductible?
Yeah, that's a good question also. You know, for example, we Filipinos send, support to relatives in the Philippines. They are not deductible.
Oh.
Because only, maybe it's not, maybe, I'm sorry, it's not, Mexican nationals who are here and sending money to Mexico, they have special privileges to claim those as support, and even claim the children of relatives who are not here, but who support the Mexican national is giving they can be claimed as dependents.
Mm-hmm.
Not Philippines.
I see.
There's a rule.
So you cannot claim a dependent who is not in this country.
That's correct.
Mm-hmm.
For Mexicans and Canadians, you can do that.
I see. Yes. Now, in terms of filing, Danny, people say that they will be able to pay less if they were to file a joint filing. If the two people that are married, is this only limited to people that are married? What about people that live together?
Well, in California, as you know, we have the RDP, which is the Registered Domestic Partners, or, same-sex marriage. And if you are married, you could either file married joint or married separate. Most of the time, married joint would result to less tax than married separate.
Mm-hmm. Mm-hmm.
Yeah.
What's the problem if people don't file income tax returns? Will the IRS know about it?
Yes. Most probably IRS will know that, and probably the IRS would write the taxpayer, because remember, the companies that you work with, for example, if they pay you, they will report that to the IRS. Yet they are required to report earnings made by individuals to the IRS in the form of W-2s or 1099s, and or maybe 1098. So IRS would know that you earned this much of a salary or earnings, and therefore would write you. IRS would write you, where's your tax?
And so you will be penalized or you will be imprisoned?
No in prison yet. But you will be penalized.
Not yet.
Not yet. It's a long way yet to go to prison for not filing. But IRS could be nasty.
So I think the first,
intentional disregard of the law.
Yes. I think the most important thing is really comply with the law and file your income tax returns. And if IRS writes a letter, immediately contact Danny, correct?
That's right. Yeah, don't ignore any IRS letter, really.